Hello, my name is Cheetham. I'm going to bring you a perspective from the UK. I spent 4 years working with the Open Banking Implementation Entity, where I was really looking after everything to do with customer. So understanding use cases, understanding the customer journey, understanding how to implement that across the marketplace. And what I'm going to do today is I'm going to share with you what we learned around consent, the customer journey, and where we're heading off with the direction that the fintechs have taken to develop some really interesting customer propositions. So we'll be exploring what consent management actually is, why it is critical for a trusted customer experience. I'll bring you up to speed on how it went in the UK, and then I'm going to tell you what these amazing fintechs have done with all that data and how adoption is going. So let's start by just defining what we mean by consent management. You can read what I've said on the screen. It is the process of managing and storing the customer's consent so that TPPs can access their personal financial data. But in reality, let's go beyond that. It's really about that experience that we've all had, you know, when you set up an app and you're going through the setup process, and at some point you're shown a big long screen with loads of terms and conditions, and you may see a privacy notice on there, and you just scroll down to the bottom there and you just click agree, and you just don't know what it is that you've actually signed up for. Very few people actually pay much attention to that at all. Now, that's all enshrined in law, of course, and TPPs have to do these things. But we concluded there was a much better way of, first of all, allowing customers to grant their consent and then to be able to manage and revoke it in due course and feel that they've got complete control over what they're doing here. So we set about trying to explore that. As part of the customer experience guidelines that are developed in the UK, we felt that this is a really important area to look at how the key messages were conveyed to consumers, what they would understand as they went on this customer journey, and how that could be managed in the future, so that at all points they feel confident about what they're doing, they've understood the decisions they're making, and that they feel they're in control of their personal data. And I think this is a watershed moment, really, because for too long, people have been just rather resigned to the fact that they have to sign over the rights to their data in order to get a particular service. And we think that's really important that we shift the balance here so that consumers have more control than they have today and really understand what's being done with their data. So this was something we spent an awful lot of time thinking about. Let's have a look at the customer journey for this. It is really important to make sure that we get this right. And here, there's an awful lot of work that's been done around the customer journey, the user experience, how to present this through the user interface in ways that really make sense. And I'll be sharing some of the things that we learned through the research that was done in the UK, what we've learned from practical experience that works and really helps people to understand. But let's put this in some kind of context now by just exploring what the consent customer journey looks like. So you start with setup. This is opening the account. This is that bit I was just mentioning about where you scroll to the bottom and click agree, unless you really want to read through all of those terms and conditions. This is where the customer is presented with the terms and conditions, the data privacy notice, and really where in the European and UK law, GDPR is at the fore. This is about really making sure that the regulatory obligations around data privacy have been met, and that at a minimum, the third-party provider providing the service has met their regulatory requirements. It's not always that easy for the customer, though. And too often this is presented in ways which I've just described. You know, this is rather obtuse and not easy to understand. The next stage in the customer journey is to obtain customer consent to access that account information. At the moment, this is done pretty well by most organizations, but we really felt that actually it could be done better. It's really about making sure that the customer understands things like what's the purpose of sharing their data, what the actual data types actually are. So is this about standing orders or direct debits or transactions? Is it basic information about their standing orders, or is it detail around all of those standing orders? Making sure that people actually understand what it is, what specific data it is that they're sharing. They also need to understand the duration for sharing, and that needs to be really clear, that they know how long they're doing this for, and they've got a clear path ultimately to be able to manage that, so that if they choose to withdraw their consent, revocation should be easy, and that if necessary, they can even arrange to have that data deleted, although that's not always possible because of other regulatory requirements. The third step in the customer journey is around authentication. This is really making sure that the identity of the bank account holder is correct with the bank. So the bank needs to recognize it's the right person. So this is just where you prove this. This is typically done in one of two ways, either through a redirection, say an app-to-app redirection, which can be as simple as a biometric, a facial recognition or a fingerprint. It can also be done through decoupled if you're using more than one screen. Those are the typical ways that it's done. So, for example, you're doing something online and you get a message via your phone, which is a decoupled experience. But that authentication generally looks pretty similar to your online login. So if you're familiar with your online banking login, this will look very similar. And that's a really important part. That familiarity certainly breeds trust with consumers. Once you've done all that and you've gone through that setup and authentication process, then there needs to be a way to be able to manage consent. And this is about providing the process, the information and the tools to view and manage your consent, so that if you want to do something, if you want to change aspects of the consent that you've granted, or if you do want to go on and revoke it, there's a way of doing that. And we do that typically through a dashboard, a consent dashboard at the third-party provider side, and actually an access dashboard, typically in the settings on the online banking portal for the bank. So you can, in effect, manage at both ends of the chain. You can manage at the third-party provider, and you can withdraw access on the bank side. Revocation is straightforward. There should be a kind of I want to stop sharing button on all of this. And we think that's really important. That's a key factor when trying to acquire customers. So adoption is sometimes heavily dependent on the customer knowing that they can get out of the arrangement if they want to do so. And finally, it must be easy to end this whole process. So stopping the service, and if it's appropriate, deleting data at the third-party provider or putting it out of use. I mentioned that's not always possible because of regulatory requirements. And indeed, under certain circumstances, if financial decisions have been made because of the information that has been accessed by the third-party provider, then an audit record may be required for that. So you have to take care about what can and can't be deleted and what needs to be retained or at least put out of use should it need to be referenced in the future. So you get that kind of end-to-end customer journey that manages and controls it on behalf of the customer all the way through. So those are the 6 basic steps in consent. And we'll look at what that means in a moment and how best practice can be applied to that type of thing. So customer experience is really important. we discovered that using clear language is really absolutely super critical to all of this. And it's very important to make sure that you take into account what people understand from the language that you use. It's very easy as a very well-educated individual to perhaps stray into using language other people might not necessarily get at first glance. And we're all possibly guilty of that type of thing. So we did some work with a research agency and with semiotics experts to understand what people saw and what they learned and what they understood from the experiences that they had. And we had to make sure that that was clearly understood across the spectrum. So clarity of language, ensuring that we avoid acronyms or technical language or things which are perhaps broadly used within the industry but not well understood by consumers. Very important. Second thing is to make sure that all the information is presented appropriately at the right time. This can be done in bite-sized chunks, and a typical way of doing it through the user interface is to present the basic information and offer the option to for example, open up a drop-down menu or something like that if they want to go and find more about it, but shouldn't really interrupt the customer journey and shouldn't really introduce any more friction than is necessary. And there is a balance to be struck around friction. A little bit of friction can be a good thing if it makes people stop and think. Too much friction, bad thing, because it will hinder adoption. It's very important, thirdly, to make sure that the initial setup is very clear. This is the point that that I was making just now. Is, you know, too easy just to present a very long set of terms and conditions and just expect people to understand that and just take it for granted. And this is where too often these things are just scroll to the bottom and click I agree. The purpose for data sharing must be very clear. One of the things which is being worked on at the moment in the UK is codifying statements around the purpose for data sharing so that they're presented for different types of proposition in a very similar way so that people become familiar and understand what it is that they're doing. Ensuring transparency about the data. This is the point I was saying about the type of data that's being shared, the specific clusters of data, whether it's standing orders or transactions or direct debits, and whether that's basic or detailed. And also how that's going to be shared through any provisioning chain. One of the things we see happening in the UK is increasingly complex provisioning chains where data may be shared across more than one party in order to create the service or deliver the product that the customer's looking for. And that needs to be made really clear. You know, who else is going to get to see this data and what are they going to do with it? Then we have to be really clear about how long the customer will allow access for. This has got to be, you know, a clear date, and it needs to be super clear that the customer can have the ability to change their mind about these things. And that's why consent management services provided through the third-party provider are really important. I also mentioned about provision of access dashboards on the bank side. And one of the things that banks have been doing is going to their allowing customers to go to their settings and reviewing who has access to their bank data, and if necessary, revoking that access. They can disable it. Finally, making sure that if it's appropriate, the consumer can delete that data. And I've just mentioned that some of the wrinkles around that mean that it's not always straightforward. So some very important lessons that we learned, and this has been done through both research and through practical experience and working with third-party providers to understand what works best. And at all times, what we've tried to do here is to make sure that there's clarity, it's transparent, it's as clear as we can possibly make it, and works not just for the consumer, but for the market, because it's really important for third-party providers that they get this right, because it builds the trust between them and the consumer. So it's not all about the customer, it's actually about the marketplace and third-party providers getting this right in order to continue to build their business. So we're now more than 3 years into open banking in the UK. we have some well-established precedents. We have established the point about managing their consent and revoking consent and withdrawing access to the bank. These things were not, they were not mandated in the regulation. They were done really because that was what was necessary in order to build trust and build confidence with the customers. But as we've gone down this road and started to learn more about what customers can do, we've been thinking about how best to develop consent in a way that really helps customers retain control, builds confidence, and starts to develop and underpin future growth in the data sharing economy. This is not just about consent. It's really about customers. It is really about the marketplace and about the broader economic benefits that can be gained and the social benefits that can be gained from data sharing. It's one of those things where if you can build trust, you will provide a really solid foundation for data sharing and for the services that run on that. And from third party and bank perspectives, it's about ensuring that we have the right types of tools in place to create auditability and understanding what is happening with data across the provisioning chain. And that in due course, we can think about how liability might be apportioned if something goes wrong as this part of the economy really starts to grow over the next 5 to 10 years. So what we're doing at the moment in the UK is thinking about how to codify consent in a standard and how to tighten up use of data across the provisioning chain, and giving far greater emphasis to aspects like liability and customer redress. It's an interesting thing that whilst GDPR, which is the data privacy regulation across Europe and the UK, has really brought a lot of attention to this aspect and actually has helped to tighten up the way data is used, it doesn't always help with customers, because if something goes wrong, if there is a material data breach, for example, and customers suffer some potentially quite catastrophic loss as a consequence, then current regulation means that actually they have to go to the data privacy regulator, which is the Information Commissioner's Office in the UK, and get an opinion on the case from the Information Commissioner's Office, and only then can they take that and apply for redress through the courts. So it's a rather long-winded and I think rather unsatisfactory process. There's no easy way of getting redress for something which could be absolutely catastrophic financially, emotionally. It could be hugely damaging to an individual, to a business. And this is an area which I think really needs some attention over the next few years as this part of the economy grows. Because, you know, with the best will in the world, things do always go wrong, and we need to have a proactive approach to solving this and making sure that it works both for consumers and businesses. So one of the things we're really thinking about now is traceability and audit, and there is some interesting thinking going on about smart contracts and the way that you can use privacy enhancing technologies and how these things will work in tandem. This is quite far out stuff, and I don't expect it to turn up in the next year or two, but you know, there's certainly a train of thought here that is beginning to explore these type of aspects and thinking about how to make life easier for the customer and work better overall for the market in the longer term. One of the really interesting aspects around all of this is that we see and we've learned that actually open banking is just the tip of the iceberg. There are many use cases, and this stretches across other sectors. I'm deeply involved in a project to take the principles and approach from open banking to the energy sector at the moment, where we're dealing with both business to business industrial data, and we're dealing with personal data. This is data that originates from households and electric vehicles, and how that would be shared in order to create services of tomorrow, which will help for much more rapid decarbonisation and decentralisation of the energy system. And we can see that actually the same principles that sit behind open banking and the way that consent is managed can apply in the energy sector, they can apply in the transport sector. And we've even been exploring other sectors from buildings through water, the agricultural sector, and telecoms, all of which are, I think, right for data sharing, and that can start to create the type of environment where the data sharing economy can really start to grow. But in order to do that, you need to get to a point where you've got some common rules. And one of the common rules needs to be a cross-sector consent standard. And this is something that the UK government, through the Department for Business, Energy and Industrial Strategy, are exploring in detail. There's some work going on around smart data. It's called Smart Data Initiative, and there's a smart data working group, which is considering what different sectors need and how the interplay between data privacy regulation and sector regulation will work. But what we're coming down to is the need for a cross-sector consent standard here around data. That means from a customer perspective, they have a common set of rules, they have a familiar customer experience, and that ultimately they can trust the way that their data is being shared. It doesn't matter if it's transport or financial services, banking, insurance, transport, you name it. Why not have the same approach, same set of rules, and make sure that at all points it's safe and secure and easily managed for the customer. So here we're looking at a number of things. So we're looking at the purpose. I mentioned before that we were looking here at creating a codified statement for the purpose. It needs to explain the outcome that the consumer will receive by sharing their data. We're looking at onward data sharing. So this is the provisioning chain, listing the organizations that will receive the customer's data so that the chain is visible, making sure that that's accessible by the customer. This could be done through consent dashboards. Making sure that the data items that are shared are really clear. So these were the things like the clusters, these are the transactions, the standing orders, the direct debits, basic or detailed. These all need to be part of that consent standard. We're thinking about the level to which data protection is applied. So what is being done here? You know, is it this digital rights? Is it encrypted? Is it anonymized? Is it pseudonymized? What are the aspects that we need to take into consideration here? An important area is what we call in the UK and Europe special category data. So this is sensitive data, which particularly relates to things like ethnicity, politics, health, genetic data, and so on, and how that is dealt with. So a lot of attention going to that. And finally, making sure that this duration point, the validity period for the customer consent, and any requirements to refresh are clearly understood. And there's, between these things, there's a lot of things that are beginning to happen. So both at a government level, this is being considered, and people are looking for the right way to develop this to make sure that it's implemented in a way that works for the customer, for the marketplace, doesn't introduce overburdensome friction, and is easy to understand, and is a workable model. Encouragingly, there's some great work going on in the open banking implementation entity itself, where they're looking at what does this mean specifically for the open banking environment. So they've taken some of this thinking and started to think about how to implement it technically. So we're looking forward to see how that develops over the next 12 months or so. So that's more near term, and helps us to see exactly how this will develop in the longer term, and what the kind of foundations are and how they work for the customer. So this is all really encouraging stuff. And this is what will start to happen. Building trust. We can already see that customer adoption is starting to increase rather quickly now in the UK. In March, we went through 3 million customers, and we have something like 307 plus regulated providers. You can see the numbers. There's more than 200 third-party providers, and approaching 100 account providers beginning to come online. The net effect of all of this, and with the pipeline of third-party providers and others that are applying to join the open banking environment, is that we're building an ecosystem. And that ecosystem is incredibly powerful. It's starting to produce some really innovative, really creative propositions. And the more that happens, and the more that test and learn occurs throughout the ecosystem, the more we're finding that propositions are achieving this product market fit. They're finding out what works for customers. They're working out how best to deliver the types of things that we envisaged right at the start of our journey back in 2016. And exactly how open banking should develop in the future. So I find this curve and the rate of growth really encouraging, and bodes well for, I think, what looks like a really exciting and expansive time over the next few years. And that's how we can start to map out the different types of propositions and the incredible things that fintechs have done. So this little chart that you see here just tries to capture some of the things that are going across the ecosystem. I think when I started talking about open banking on stage, going back now 4 years, we started to talk about some of the things that we thought would start to happen. We were talking about account aggregation, personal finance management, comparison tools, looking for alternatives to overdrafts. We were thinking about ways in which you could do affordability checking, those kind of things. But in reality, these amazing fintechs have gone way beyond the things that we'd originally envisaged. We ran a workshop back in the beginning of 2017 where we were looking for ideas around, what are the use cases that people are going to have. We came up with about 77 different use cases. Well, I think we're well beyond that. And what you're seeing now is just one snapshot that I've tried to summarize some of the things. You can kind of capture these as new ways to pay, better ways to borrow, ways to save money, ways to manage your spending, ways to improve your credit score, and other incredible things as well. One of the things that I was blown away by, in 2019, we set up a fintech challenge that we called Open Up 2020 with Nesta, who run a fantastic series of challenges for tech companies. And what we were looking for was really innovative consumer solutions. So this competition that we ran with Nesta, Open Up 2020, had something like just over 100 entries. And in those entries, we saw that every aspect of the customer journey, of the customer's life, was covered. We found in their propositions, literally from childhood through to old age, at every stage of your life, every stage of your journey, there was somebody thinking about something and making it happen with open banking data. And that's the thing which I find phenomenal, is the creativity and the innovation that is beginning to develop. And some of the things I've seen we hadn't expected, but are really encouraging. So things like financial assistance and tools for vulnerable customers, finding ways to provide older people with more independence later in life, particularly if they have problems, let's say Alzheimer's and diseases of old age, which make them more vulnerable, that allows them to use services which can help them to maintain their independence under the watchful eyes of their family or a trusted guardian. So really good things starting to happen in that kind of area as well. But you can look at the kind of scale of things here. We're starting to see some fantastic ideas here. Salary drawdown and much cheaper overdrafts and access to loans for people who have thin credit histories, because they can simply undertake an affordability check using open banking. These have been really useful, particularly over the last year or so, where many people have had a terrible financial strain. So we've seen growth in this type of area, and we know that some of the fintechs that are operating these types of services have enjoyed actually a good year, and their customers have found tremendous benefit by being able to access funds when they needed it most, which they perhaps wouldn't otherwise have been able to do. So that brings me to the end of my tour. And I finished really by saying that the key to all of this is trust. Trust is really only gained by being transparent, by making sure that people have complete control over their data, and that the way that they manage their data can always be under their own control, and they have complete transparency. So I wish you well, and thank you very much for the opportunity to speak today. Thank you.